morning, class. Welcome to Homeroom with Unk and Market Monk. Morning, P. How was your week?
Really good. Couple big winners, and the ones we talked about last week: Domino's Pizza, Travelers Insurance, a couple other earnings things, and then there's a lot of maintenance on crypto trades. You got to take some off the table. Some of them let you back in. Just wait for them to have a bad day. So it's kind of more of the same there. Some of the smalls we've been talking about still popping off pretty well. So despite the sizable pullback in the indices. A lot of our stuff held up. So, um, been here before, and the market wants to keep pulling back. We'll keep finding things. So, really good week. Confirmation of the work. That's what I'm always looking for.
Yeah, definitely. That 2 weeks ago, if you bought it, still pays off. This last week, and it was crypto for me. So good to hear you're still on that. You even said Friday, like lock some up before the weekend. Our entry was just too good not to take a little
Yeah.
bit off the table. And then the real estate kind of came through this week too. But again, it's been in this cycle. I pretty much since you said Unk's Market that I picked up that 10 days or 2 weeks of trading is pretty much what you got to give a play, and then you just take some off the
Yeah.
table. The runners keep running. You move the stop loss up. It's been really easy to manage. The only thing I'd say this last week it was harder to find entries, and so I didn't buy a whole lot of stuff last week. More scaling out. That and the news plays. News plays are just really not there unless it's the small company news plays really aren't there. It's the bigger companies that um, or the more the 9 out of 10 on the street names that are doing better with news right now. So it's pretty much a lot more swing trading in this market for me.
Yes. And quite a bit of the follow through on news has been bad. Like I mean, those are some of the stocks aren't really responding well to some of the news that comes out. I mean, obviously, you had CrowdStrike, which is still an ongoing thing, and then earnings. Travelers Insurance, kind of good example. So their numbers were fine, but California, Florida for insurance is right now is like not good. Like the State Farm's trying to raise rates by 50%, all the disaster claims, adding up. So a lot of these stuff with earnings around the corner, you just got to be mindful of. It's not so much the numbers, it is the guidance, but it's sort of like the keywords of the guidance, and some of those keywords, quite literally just trigger algorithms to sell stuff off. So the easiest, best setups for us in this earnings season, I think, are going to be the stocks that just take a beating, and then they hit a spot we saw 6 months ago, and that's what I expect for a lot of them. Yeah, some will be winners and take off. Going to be hard to sustain some of those gains, but just some of these have just done so well. You cannot look at CrowdStrike at 300 and call it some generational entry, given where we were
Oh
on
yeah,
that.
no.
So if Crowd was the thing that flipped my read bullish on Spy, it in a sense can be the barometer to flip it bearish for a bit. I don't really think we get some big crash or something, but you have to be mindful of that. And we've called SAS a grad school trade for a long time, and this is exactly the environment and exactly why. You got to find the ones already at our pivots, the ones that already took their beating and recovering. You just lower your risk so much. You enter Crowd, you know, it can drop another $50, $75. I mean, we've seen it before. So, um, yeah, pile in and buy the dip without any kind of analysis. I mean, that's really they're playing with fire, and I see so much of that on Twitter that we're built a little different though.
Yeah, no, just the market sentiment in that regard should lead you to better things. You can play things in an uptrend right now. Like we're just in that market. You're
Yeah.
safer. You're safer in that regard. I really haven't seen too many of these um, big pullbacks that came back in a time that most of these people would be happy with. Let's put it that way. Because most of these people are day traders, right? It's got to be the trade's got to happen in 10 minutes for them to be happy. They can't sit in something like UNH, they can't start building a position. Um, and not that CrowdStrike's a good example, but just in general, getting a 20 or a 50% drawback isn't always necessarily where you want to buy. You want to let from a TA standpoint, you want to let some consolidation happen, and from a news standpoint, you want not necessarily relief, but you want it to flush or process fully. I actually have a news play on my list this week where, and it made your list too for some reason, but I mean the news is just so bad, but the consolidation on the chart has held up for almost 8 months, so it's looking good now. But the first red candle down, if you think that's your golden entry, you're probably not going to be too successful at this in the long run.
The
As far as the ERs
the
go, though,
pay
P, I
the,
want to point out that it's easy because
yep.
you're taking the um, what do you want to call it? The direction off the table, pretty much. Like that's half the battle, picking which way it's going to go with those key words you say they're going to say in guidance. But if you're playing both sides of it, it really doesn't matter as long as they say something that gets the stock moving. And I think that just makes it a little bit
Oh,
easier
that's what
for
I go
everybody.
after. And yeah, yeah, and you'll notice too, you want to do that. Like ones like Netflix are not really the one. Um, and I mean, we've seen big moves in like Netflix, Facebook, etc. But the best setups are, I mean, Domino's Pizza had 32 million shares,
Yeah.
massive insider ownership. I think over 90%, and that's really where you want to be with these earning setups because the implied volatility isn't crazy. So even if it only drops 6%, you can get out and you're fine. But you try to get in these ones where I need a mega cap to drop 18% to make
Yak.
money. That's not where you want to be. And so I mean, yeah, if you're risking $50, okay, well you're just lighting the 50 on fire for the most part. So yeah, I do think that there is a kind of profile I look for in those setups to make it work. But yeah, my preference on all of them for the most part is I'd rather it go down to see how it reacts. If it's something shoots up to all time highs, I'm just it's like I'm out of it. I don't really want to short that move. There's no levels up here. It just gets a little trickier. But one more thing on patience. So I think the people in the room hopefully have seen this enough now. Like we start to get on a small cap and we put it on the hot list. Um, Monday pre market is not really when to be like, what's why isn't it moving? Where's the news? What's going on? With this, and then it's not even down. It's not even red, but
Yeah.
just this like I entered this and how long am I have to wait here? Well, if it's a small cap under $10 and we got a range of I don't know 75 cents or a dollar where we're like just we're adding here. You park and you wait and you know set a sell limit at whatever target you have above. A lot of our notes say that, but yeah, I mean just to harp on that one trade of that one small cap you pick and be like, when's it going to go? That's not really how it works.
Yeah, no, the last one I can think of that was like that was Soundhound. I mean, we were pretty adamant I haven't said this in a while either. If y'all are stressed, trading ain't working for you, great. Just buy some shares under my level, be cheaper than Unk, you'll be all right. Um, but man,
Yeah,
the
yeah,
Soundhound, we were telling people to buy it for 413 or better, a one line chart. Um, and it's gonna go to 6, and well, son of a bitch. And then currently,
yeah, right.
currently I think it's beyond meat, but you just got to give those time, like you're saying. They take a couple weeks, and for me, it's the other way. And this is, yeah, definitely a good time to mention this. I asked myself like midweek, a question every trader should just, and it's the quick answer. Don't you don't want to think on it, but just in your head. Here, and let's use you as an experiment, P. Would you rather, and you got to answer instantly, can't think. Would you rather know the stock's all-time high price, like predictive future, like you know, or would you rather know the lowest it's going to be? Exactly, because it's easy. I mean, I could tell you the all-time high,
Yeah.
but that could also mean like I could tell you like say Spy's going to 650, but that could also mean Spy. It's a horrible example, but that also means during that time it could also go to 400 because you don't know the bottom. So identifying the bottom is way more important than identifying the top ever will be. I think a lot of people waste time on that, and if we're calling a level, the flow of the, I mean, you'll hear me ask P probably a week or two, maybe 3 weeks after we're on plays. Is there still puts here, or where are the puts at? Because we're looking for that floor. Um, time should be your friend, not your enemy in this, and I think that's that what happens when you play just strictly options is you're always against time. If you just give yourself a little bit of time on some of these share plays, I mean, again, 4 to 6 still sounds like 50% to me.
And the with options, you have to really ramp up the precision, and it's why I'm on coin so often.
Yes,
Is
yes.
I can really clearly see, and I keep telling people like it's going to let you back in, um, but like some levels are better than others. 220 has turned out to be a stellar level on that thing, and then
Yes.
226 is kind of like it bounces around that zone, and then I said late last week I'm like I like it under 240. I don't like it full under 240. I like, two calls and a put under 240. But what did it do? Popped up 10%. But what does Twitter do? Now they're saying the call triggers 260. I mean, with $40 above the level I said you want to really trade this thing. So, I mean, your pivots really need to be below the current price, not above the current price. They're trading a market that doesn't exist anymore, in my opinion.
Well,
And
they're storytellers, P.
it's just
They're not traders. You're trying to
yeah,
tell a
yeah,
story for a
right,
future
right, yeah,
trader, what you're gonna do when this happens. It's all like to stay 2 steps ahead of everybody. It's I don't know a better analogy than it's the carrot in front of the horse. It just is what it is. That's how
yeah.
they sell their daily engagement. Where you're looking
Well, and
for
I think
where you're
the
looking for
Elliott wave.
trades. That's the difference.
Yeah, exactly, right. Yeah, the like the Elliott wave stuff to me is a way to rationalize the pullbacks when they have this huge target, and it's like, oh, well, this is just a wave two correction, and I mean all that, whatever, that's fine. TA, there's lots of different ways to do it. I don't like that one, but the thing is, like, you can't write options to coin 300 and weather a drop from, like, let's say we go to back to 240, or we pull back to 236 by Tuesday or something, and then we shoot up to 270. You cannot hold coin options for a drop like that unless you're really actively managing it, hedging it, buying puts here and there. But they never talk like that. Theirs is just like you buy and you hold. Buy and hold with options does not work because these guys are not putting up the kind of money it would take to buy and hold something. You want to buy and hold coin 200C leaps, go for it. But they're like 10 grand. So no, you're not doing that.
Well,
Um,
you've caught enough
so
of them dudes. I think Morrow was the last one I remember. You caught enough of them dudes. Were like, well, if you entered
yeah,
when you said you did, you're down 50% right now. And regard
right, yeah, yeah,
regardless of your TA or your position sizing or whatever, if you're down 50%, option shares, whatever, your entry sucked, and you need some rules. That's
yeah.
just what it is.
And this thing about options, the price the price does nothing. You're worse off
Yeah,
tomorrow than you are today.
yeah.
So yeah, clock is ticking, and it's just not worth it. Share side, to or it's not worth it on to do options on a lot of those crypto smalls. I mean, the
No.
way to do it is I talk about it. It's in the money leaps. Effectively, those are going to move like the shares do. You're just you're putting up a little less money. So I mean, if you want to do that, that's fine. But if you're if you're in 2026 in the money on Wolf or something, that's you're yeah, the risk is a lot lower there. But if you're going 100% out of the money October, um, you can get in some trouble pretty quickly
No,
on
I
stuff.
bought I think it was 2 year. I don't think it was last year. I think it was 2 years ago. But I bought it was Riot for sure. $5 calls. That'll tell you how long ago it was.
Yeah,
And I bought some shares and I bought some
right,
five
right.
dollar $5 calls. Right. I was like, I'll buy some shares and all right, these calls are cheap enough, and I want to hold for a little bit. So let's add some calls too, and just a couple of them. But I made more money off the shares than I did the calls. Like the percentage, I made a better percentage off the shares
Yeah,
than I did
yeah.
the calls. So that right there was like, well, why even take time to learn this when I already kind of got smalls down? And some of these I'm going to win on, but some of these I'm going to double my losses on as well. It's not like because
The
I really thought I could take the options off the table first for a pretty good gain and then kind of do my share thing, but it was the complete opposite. Like those contracts needed to go deep in the money before they actually showed any value to them. So it wasn't worth the $50 to have those contracts.
varies by the stock, and yeah, and crypto miners in particular are not great with that just because of the Greeks. But the guy in our room, secondary moves, he does. If you want to do options with crypto miners, it's what he's doing. He sells calls on them, and so he has all the shares already. He sells
Yeah.
covered calls. It's way above what he paid for it. So it goes to the moon, and oh no, I got to sell CLSK for 70% gain or whatever. I mean, boohoo.
Yeah.
But
With
it's
and the
not. If
premium
crypto
and
has
the
a
premium
couple
pickup. Yep.
and the premium, yeah. I mean, if crypto has a couple bad days, those contracts go to zero, and you just pocket the premium. So
Yep.
so
No,
yeah, I
love it.
mean, and selling them, I mean, you're not putting a lot as far as the premium risk. It's not really that much, but it's a lot of lunch money, and it's a
Totally.
good way to manage a position
Well,
like
if
that.
you're doing
So
that every day at the end of the week, it's a little
yeah,
bit more in lunch money, right? Like if you're
sure,
doing
yeah.
that, I mean, it all adds up. And I stress that
Well,
to people.
maybe they DoorDash, maybe they DoorDash, then it's lunch money.
You kind of beating around the bush a little bit. What are your thoughts on crypto this week?
Um, yeah, so I think I mean clearly the political angle of crypto, we were way ahead of that, and I think you're seeing that play out. You have the big Bitcoin conference coming up. There's always some sell the news risk with stuff like that. Overall, I mean the inflows on the ETFs are just astronomically huge, but you're seeing what ETFs can do, which is to hold the price in a range,
Okay.
and that's I think what we're seeing. But the I mean to 60K, the way 60K held up was huge, and I don't think we're going to get up here and not revisit close to those all time highs. So I'm definitely leaning long on it. I just I think that it's a situation where to enter now, you've missed some really good entries, and you kind of have to wait for a bad day, or you have to find the lagger, or as flow comes in, you know, I can see kind of what's going on. But yeah, so there's that. I'm waiting on the MSTR split. That's going to be pretty big. That'll be much more tradable for options. Again, I don't know if you saw kind of I put it in my notes, and several of us bought calls on it, and I bought a call for $300. I sold it for 1,000. It closed the day at 9,000 or something stupid. But I mean, you can't mess around with holding one of those. And, because it went to 1,000, then went to 600, and then
Yeah.
400, and then 2,000, and then took. I mean, so again, you know, the scammers will give you the absolute top on that stuff. But yeah, so that'll clean up. You do a 10-1 split. That'll be much more readable again as far as that goes. But yeah, overall, definitely looking long. Um, the Ethereum ETF isn't much of a doesn't really move the needle for me, but Trump Bitcoin reserve, all that kind of talk. That stuff's gonna keep the excitement in the sector, which is what we need.
Yeah, you got a pretty good range on Bitcoin just from a TA spot currently. I mean, it's 55 to 70, but it's kind of a I don't know, one of them flags that people talk about on the monthly
Yeah,
chart.
yeah.
So it's kind of holding in, it's consolidating in a range, which you love to see. That it's around the last high or that 70K from 21. Um, I do think I'm with you that eventually we're going to get a breakout to the upper side on that thing. Um, with the political addition in their news, I think that probably helps them as well, especially since Trump, his statement was, I'm not gonna mess with your coins to people. So it's becoming
Yeah.
one party's better for crypto than the other. It is becoming that way, and I don't think it was that way last election, or even 6 months ago, to be honest with you. So um, yeah, the closer we get to
No, I
that,
mean
I think the better we are.
Trump's, he was dismissive of Bitcoin. He wasn't like trying to kill it or anything. But he would say like, we have the U.S. dollar. I think the U.S. dollar is best thing going,
Yeah,
and he was just looking at it in that way. Well, whoever got to him on this, I mean, it was a really shrewd political move. There's a kind of a youth vote there, and it fits into a whole paradigm of broader appeal for Republicans, I think. And I my own political views, but completely irrelevant. I don't even care. It's for me in terms of what it's doing for the market. Um, uh, it's going to be a little bit like weed, where the loudest voices against it, and this was opposite. Like, so the loudest voices on the conservative side started to quiet down, and then eventually it was a consensus. Like, we can see where this is going. So um, Bitcoin is kind of mainstreamed, and I think that's good in a lot of ways for Bitcoin holders. But it's also not going to move up in the same way that it did in its early history. And so I think people kind of need to get used to that. And that's what I keep bringing up with the ETFs. But yeah, 92,000, the 100,000. I mean, that's plausible for sure, and we'll trade that accordingly.
yeah, it's kind of interesting that you used weed and crypto together as a comparison there. Both of those, and I think probably Bitcoin's even more accepted, but most people on those two issues nowadays, they're either really for it or they're kind of neutral. There's not too many detractors on either of those nowadays. I think Bitcoin's probably more accepted than the weed still, just because of the religious aspect. But to see them politicized so much, I think that's where it's going to pay off come November, especially if it becomes a debate issue. So um, the
Yeah,
Bitcoin,
and the
Bit,
I mean,
go ahead, go ahead.
oh yeah, well, and I mean, we the so large banks have bought into Bitcoin at this point,
Sure.
and for that to happen with weed, it's got to clear up on the federal level, and that's where we want to be. I want to be parked in Tilray at $1.80, $1.78, and I'll wait it out. I'm just like, I don't ever clear all my weed positions.
Sure.
I just don't. I mean, I take a lot off the table, but there's just so much potential there. Once that clears up. So
I don't.
Bitcoin's already cleared a lot of those
I
hurdles.
don't clear out my small cap Bitcoin positions that have 100% flow reads.
Yeah, well, right there you go.
I
Yeah,
don't. I'm just gonna be honest with that. I mean, that's how I decipher that side. But I'm with you with
right.
kind of the way you said it on weed, the same way. But big, you can do the same with the Bitcoin, but I would do the ones with the better flow rates.
Yeah, yeah, I know. Well, I'm holding MSTR for this
The
split.
split, yeah,
It has not been that easy. It has not been easy to hold that given. I mean, you can go look up my entries on MSTR, but I just got a plan there, and I'm just kind of following through on it. But
it's not easy to hold like Hive.
um, Right. Yeah. Exactly. Yeah. It's just each each share is a bigger chunk of
A
change,
bigger chunk
I
of
guess.
change for sure.
But yeah, crypto's been good to us, and it's something that we collaborated on a long time ago, and just to see the follow through on that work and the way they reset, the way we find stuff before anybody talks about it, like Cipher. It's just a pleasure to work with you on that stuff. So
Awesome. No, hey, what I really like
appreciate
about
your help
oh,
with that.
oh definitely no, say likewise, man. The some of your numbers that have came to fruition since the Mara last year, it's been really good guidance. So that's a two-way street, sir. What I love about the crypto trade in our room is we tell people, like there'll be a cycle, like there's market cycles, and it actually delivers a cycle probably faster than any other sector. Um, so I like that it's kind of a proof of concept to people when they come in the room that hey, this will come back around, and it's usually once a quarter or even once a month where you can get a good crypto trade. So um, yeah, and then our vision on it. That's kind of what we sell people, like learn the stock, right? Learn the sector, learn the stock, learn how it moves, and crypto's just a good training ground or breeding ground for that, in my opinion.
So on the boring stuff, wanted to talk about copper really quickly, because copper's in a significant pullback, and it's all about China, and weak demand from China is the big narrative right now. So copper's still sitting at 423, but this had peaked over $5. So I would say watch the $4 area. Look for the. I mean, hope if the 420s hold up, that would be good. But there's some significant momentum down, and so some of that stuff we've been on, Cenex, and the way aluminum actually it's more sensitive to copper than copper stocks, which is sort of counterintuitive. But I think there's opportunity there, so I just think you want to um, stay on those, but be patient is what I would say with that sector.
Hey, looking at my commodities overall, just actively this last week, pretty red overall, just in general, kind of a pullback in commodities. I'm sure China has
Yeah,
a lot to do with that. I think that's going to be um, well, I mean, let's just go there real quick. Do you think China economy is going to crack? Like, I know we did the God, what was the housing thing last year or 2 years ago that was all China's going to die because of this house
Evergrande.
Evergrande. Yeah, yeah. So do you think we're going to eventually get to where China
Yeah,
has a major problem, or are they going to be able to kind of keep it together because they're
I
such
th-
a big economy?
oh, I think they're going to do a major intervention to stop the problem.
So the government's going to have to
So
step in.
like,
Okay.
yeah, the government's going to step in, and basically, like, you're going to buy stocks now. Like, they just they come in and they basically, you're not going to sell stocks anymore. You're going to be buying them, and
So
that's how
a lot of dust, but it
controlled
will
economy goes.
a lot of dust, but it will settle.
Yes,
Gotcha.
that's my thinking on it, and I mean, it's part of the reason I haven't felt like jumping full into Baba, even though I do think Baba's in a good spot. It's just you got to kind of see all this play out a bit. So yeah, no, I think that's the China story to me. It's got to get worse before they intervene, and once they intervene, I think it turns around.
No, that makes total sense. No, and just in general, commodities, and it's kind of the last five talk in general. That there's definitely been some pullback there, um, and then in the semis as well.
Well,
But those are the two spots I've
yeah,
seen any kind of
watch
weakness.
yeah, and I'll talk about semis in a second. Last thing on copper, the copper as recession indicator. Um, that story is going to be out there. I'm not really buying into that. I'm not saying that, but that whole idea of copper as a leading indicator for a recession is is going to be something that you see and something that can fuel some selling, for a while. And it's just for SPY, it's like, are we going to 540 or are we going to 520? And that narrative is going to play a big part in which number that we hit, in my
Okay.
opinion, as far
Okay.
as the pullback goes.
So it's copper and
Now,
is copper still in the safe place till it's under
yes.
4? Is that kind of how it works for you, or?
Um, yes. All right. So, I mean, even really, it's actually like 380, 375.
Okay. Okay.
So we got a ways to go. But yeah, that was where. So I got back into FCX um, when 375 held up. Like 350 is like the danger zone. Um, that held, and then it made a higher low at 375, and then it took off. So we're just looking for that higher low. I mean, I think you're right. It's 4, because for it to be the higher low, you don't want to revisit 375.
There
I
you
think
go.
you'd want 4 to hold. So I learned that from you. But yeah. So as far as like the uptrend holding together, that would be great, and that's why I mentioned the 420s. That'd be even better. Now, on chips, real quick.
What's your stable
Oh,
price for
good.
copper? Let's add that real quick. Like in your head, what's the stable price? Or your
Yeah, I mean, I think, well, between 4 and 450.
Okay. So
Five
425.
is kind of your breakout. Yeah, yeah,
Okay.
absolutely.
5 is the overcooked, 375 the
On
undercooked.
Yeah, yeah, five's the overcooked, and then if we get into the situation where it wants to claim that and go higher, like, we're kind of going to know, because the rejections at 5 or near 5 have been steep in the
Yes.
past. So it's going to be a tough level. You take your money off the table at that point. Okay, so real quick on chips. Last week, people caught it. I mentioned ASML. I was like,
Mm-hmm.
because you said not much going in ER, and I said, well, I'm looking at Domino's and Travelers, and I'm looking at ASML. Not really to trade that, but that's the big barometer for chips, because they're kind of the machinery side
Yeah.
of chip making, and so their statements on demand um, were not good, and it's because the chip mania runs on this hyperbolic demand that keeps going up. So any disruption of that, you get a pretty big pullback, and AVGO -7%, Nvidia down 10% in a little over a week or so, maybe for the month, I don't know, but it's down quite a bit. AMD took a big hit, pretty much all of them. So I don't think you just mindlessly buy the dip on those, but you look for the ones that are hitting a decent spot for us. Big risk in small chips like RMBS coming up on earnings. Um, they have it's kind of a tall order for them to beat and go up, given this environment. But I still think there's opportunity. I still think you can just DCA a lot of these chips if you want to just buy them and go back to work. Semiconductors are not going away, so I think you're fine there. But as far as day trading options and things, don't just mindlessly buy calls on these, because this can go on and on as far as the pullback goes.
Yeah, no, I expected pullback, but just in general, when you get that market growth or the market increase in demand, when if that doesn't continue to stay as ramped up as it was, you're gonna get pullback. I mean, even of a good quarter or a good report can get pullback if it doesn't match the growth that the move was on. Like if you're just getting 20% growth a quarter and then you go back to your normal 3 to 5%, that's a downgrade, and that's gonna come eventually. You can't stay in that hyper growth or hyper demand cycle forever, um, or at least match what the market thinks the initial move was. And then what stood out to me there from what you said is the smalls are probably going to get hammered. Well, they were there trying to pick up the scraps. Some of those businesses, if they just get a mention or a small contract, they could double their business. And through this cycle, if they didn't get that, and it looks like it's coming to an end, whatever they're overvalued by during that move is just going to come back to earth. So I do think you see that in the smalls pretty dramatically. I was just thinking it was going to be more of a fourth quarter thing, maybe after we don't get September cut and not through the summer. Um, but ER is usually a catalyst for that to happen. So I guess that's probably going to be the timing for a lot of these guys that don't have a substantial pickup in their business through this last cycle. Um, yeah,
I mean, Nvidia has been the only one who's consistently been able to deliver on. We raised
numbers,
guidance. We're
numbers.
raising
Yeah,
it again. We're
yeah,
raising it again.
yep, yep.
Yeah, yeah. I mean, the others have hiccups. Even AVGO is probably the second strongest one, and so like for me, I didn't feel too bad about missing that Nvidia move because I had AVGO, so it was I mean, it did kind of the same thing, share side, but uh, yeah, there's going to be uh, some big losses on some of the smaller ones.
Well, if
But by
I'm
the way,
if
we got to mention Intel.
yeah,
We nailed that one. That was about as good as it gets.
uh,
The one
don't
everybody
search the
hates.
group.
Yeah.
My levels are real. Don't search the group. um, yeah, that's the one. I mean, if you still want to buy something, that's the one you still buy, in my opinion. Like if you set it and forget it, that's just me though. Um, from a price point
Yeah,
standpoint
I'm
too,
with
that's
you.
a way better way to go. Um, I still think it was a good thought experiment. I'm still in the boat that Nvidia is going to $100. I still think we get that test. And if that's going to happen to them, blue chip number one with the actual business, what do you think's going to? I mean, that's 20% down for them, right? Mass right on that. Um, what do you think that's going to do to the ones that don't have the business? I mean, they're going to have some pretty good drawbacks. So
Well, so yeah, so AVGO, the number, it's 1,200 pre-split, so it's 120. Um, Definitely could get revisited in a sustained disaster mode. $80, the 800 level from before,
yep,
could
yep,
is
right here.
is plausible.
Yep.
And the thing is, like, there's the it's been great for AVGO to have this bigger chunk in QQQ. That's been great for it. There's two sides to that coin though. If the Qs start to pull back, they take a bigger hit in those pullbacks than they used to, and so that and same way in all the big chip ETFs that are just gone. Um, they're gonna struggle there, and then it's the ones that take the big pullback and stay down there for a while. And I think that's what people, especially options traders, have got to be mindful of. That you're not entitled to go revisit all-time highs just because something dropped 20%.
Yes. Yes.
So yeah, this is where the flow reads really come in, and we're pretty good about what kind of trade is this? Is this an options trade? Is it load some shares in this $50 window, kind of thing. So yeah, I mean the like massive pullbacks in chips are definitely on the table. I'm with you on that.
You have a big drop in a stock. I don't care what the percentage is, and if you're looking at the all-time high from there, you didn't learn from us. If you're looking at mid candle from there, you learned from
Right,
us.
there you go. Yeah, yeah, the
um,
mid candle thing. But yeah, works both directions very well. Absolutely. Yeah.
exactly. You touched a little bit on SQQ. I see that creeping back into your notes a little bit.
Yeah.
Is that a time to buy? I mean, that's $8.
Um, so yeah, I mean it's the $10 level, and I know it's an ETF, but this again is something we something we see often. I mean, Wales just put a bullseye on $10 December. I think Monday I posted that, and those contracts went from $30 to $90 in 3 days, and that's out in December. And so then I get that one contract I pay attention to, and then all of a sudden I'm like, okay, well here's 15C, further out, and here's 8C October, when and then it gets to 8. And so I see them walking it up in options. And, a lot of it is, I'm sure, they're hedging, and that's how you should treat that one, anyway. But yeah, I think it's definitely worth being mindful of. And if you're sticking your neck out long in a lot of tech at these prices for that ETF, it just makes some sense to start to scale into it. And you're way up if you scaled in when I brought it up. But I think there's still going to be a lot of time to add. But yeah, under 10 is what you want, because it's probably going 14, 15 at some point late this year.
Yeah, I'm with you. If you're heavy into the semis, it's a good hedge, 100%,
Yeah.
against what you're doing currently. Um, do you want to talk ER this week, P? We're back in the thick of it. I don't want to spend too much time here, but just on your general thoughts. It kind
Yeah.
of feels like the first week that we get some real names. We get every sector. It's like we had preseason on the ER. Now we're getting to the bulk of it. Um, uh, just kind of what do you see going into it? Do you think it will be company specific or sector specific in some of the moves? And just general direction. Do you think a lot of these guys are going to hit? Are we still at the market where guidance is so low, such a low bar that it's hard to miss? Or are we starting to get back into the normal market where we have reasonable expectations of growth?
Well, I think um, there's sectors like the staples and defensives. They look pretty good going into earnings, because I think their expectations still are pretty low. And like we've been talking about soda
Yep.
a lot,
Anything in
and
a can.
so those,
Anything in a can.
yeah, those stand out. They tend to be pretty good for options trades through earnings, because they're cheap and the IV is low. We did that with Procter and Gamble last time. I mean, just I think it went up 6% in 4 days. Contracts, 500% or something crazy like that. And then things like freight and shipping, like brewing there, and definitely, I think it is going to be kind of name specific, because I look at something like VRT that we've talked about,
Yeah.
that has kind of already had a big pullback, and I think that sets up nicely into earnings. But then I look at like Texas Instruments.
Yep.
They're a chip maker, and on kind of the boring side, and they could get hit pretty hard. 10 to 15% is what I'm thinking might happen to them. And then kind of an outlier week two, Spotify. Spotify does its own thing. It makes a lot of its biggest moves up when the market's stagnant. So that'll be kind of an independent read. And solar. This is when solar earnings kicks off. Enphase Tuesday. So interesting spot for them. They need that rate cut hope, is what is the main thing driving them. The I don't actually put that much into. I don't think Trump's going to try to kill solar. I don't.
No.
Uh, that's not really what's going to happen. When he after the news, events with him, solar took a big drop as kind of a knee jerk reaction. But overall, I still a lot of room above for the solar stocks.
Hey, if it's an American sun, it's gonna do good under Trump.
Yeah, yeah, right,
If it's
exactly.
a
There you go.
Chinese sun, we ain't doing that shit. I mean, that's
Right.
that's where he's at. So, um, I could see him
Yeah.
being pro solar if as long as that stays in it
Yeah, like
stays
we're
in
we're not
America.
we're not gonna let China, rule solar. The same thing. Bitcoin's gonna be made in America. So yeah, I'm totally with you. That's not happening.
Wow, I love it. Um, yeah, yeah. So good there. We do have PCE GDP this week, so some numbers, but the market hasn't really been. I think the market is so fixated on rates that those numbers really haven't moved us too much, like they did during the soft landing phase when we were waiting for that. When people were waiting for good numbers to as some sort of indicator, I really think we're just fixated on September at this point. Kind of tunnel vision in that regard. Uh, So good
And
earnings in my opinion, like the normal sediment really isn't there. You just got to deliver, especially if your story is we'll be fine through the remainder of the year, and then you couple with that, we're going to get a couple cuts. Should bring some relief to some names, especially if they can report decent.
you definitely you're if you're doing earnings through these, you want both sides of it, and
Always.
I try to find affordable trades that get you both sides and something likely to make a big move, and that's But real quick, before we get to Spy,
Yeah, yeah.
Verizon, AT&T, T-Mobile, like
Communications.
I view those their communications, them in particular, they're defensive stocks to me.
Yes.
Like they
At
do
this
they
point,
react
yes.
in that way.
Yes.
So I think it's worth looking at those. Verizon reports Monday morning. I'd posted a trade on Friday on that, looking extremely bullish into earnings. So I'm interested to see how that plays out, because I do think that there's an opportunity to park some money in some of those, and it's kind of like buying Pepsi, Coca Cola at this point with
Well,
how the market's treating
the
those
thing
stocks.
about communications is just the way their industry, I don't really know how to say it, or market works. I mean, is cell phone usage down 25%? That's not happening. Are the kids that are becoming 12, 14, 16, or
Yeah,
8 or whatever age you think is appropriate for them to have a phone, those new customers are still coming on. So their growth is pretty um, not stagnant, but their growth is pretty much even keel. Like they kind of they're recession proof. I mean, are you going to cut your cell phone off? That's probably the last thing you're cutting off. Um, so yeah, I can see them as like you're saying, as like a staple or a commodity almost.
and then one real quick sector comparison. I have a question for you. So
Uh-oh.
CrowdStrike screws up and messes up the internet and airlines, banks, millions of computers. People are going to have to manually reset all these PCs. Disaster, right? It drops 18% pre-market, recovers some of that, drops 10%. Probably goes down from here. So that happens there. Nike has a bad earnings report and drops 20%, and complete disaster. So, but why so much of a drop for Nike when the CrowdStrike thing had such a bigger impact on the world? What's your answer to that?
I'd have to look at the Nike report, but I'm assuming they're still having a problem um, with the inventory with existing orders not being filled, so to
Yes,
speak,
that
because
was
people
it.
still
Yeah.
have product.
Mhm.
I really think that's where they are. So, um, if I'm trying to think of a retailer, but if like a Macy's closes 100 stores, that negatively affects Nike. So they've been kind of Swiss cheese in that regard, um, to where their numbers aren't even touching what they were maybe 2 years ago, 3 years ago. Definitely not pre-COVID numbers yet. So they're just reeling in that regard. Whereas CrowdStrike, yes, a bad event. Yes, it affected a lot of people. But if they don't turn off their memberships, it doesn't affect their bottom line. Um,
Yeah,
so two totally
you hit
different.
on it. It's the ability to trade at a multiple, right? Like that story is still right there for CrowdStrike. A lot
Yeah.
of people really can't drop their subscription. They have the moat, as people talk about in some ways, in cybersecurity. So, whereas with Nike, like what is the path to trade this at a higher multiple? And it's harder to find one. Software, you can always find more hope for that.
Well,
So
Nike needs
so
almost
when you
that.
got
That.
when you got
Go ahead.
you
Finish it.
got physical products, you got a warehouse stacked of shoes. What are
Yes.
we going to do with them? That's different than software, where it's not tangible in that way.
Yeah, no, Nike needs the Facebook revamp where they kind of shift their business from depending on retailers, and a little bit online and a lot of promotion through advertising through NBA players. I mean, they pay these NBA players a lot of money. They need to restructure that so it's a little more efficient for the actual product they're moving. because they're losing a lot of outlets of places to sell shoes. And we all know I'm not a Nike guy, I'm an Adidas guy, but Adidas quietly has started selling Yeezys again, probably for the last 6 months, because they just need to sell product. So I mean, after all that debacle of we're not going to sell this guy's shoes, they're selling them all again. Just because you can't lose that market share or that market outlet, places to sell, or consumers in anything that's like that. You can go from Levi's to the Canadian Goose jackets and all that stuff. I mean, it's holding on to the market share you had pre-COVID, where you could find them. You wouldn't have to drive more than 20 minutes to find any one of those products, right? You could find a store that carried that brand. Um, Nike, of course, you're going to still be able to find, but go find me a triple fat goose Canadian Goose jacket right now. Like, it's not going to be as easy as it was 2 or 3 years ago.
Yeah, absolutely. Good take. So let's get to Spy. Don't want to run too far over here.
Yeah.
Um,
I noticed real quick because I wrote the numbers down. We were 56. Excuse me, 65, 16, 565, 16, and then 547, 91. So if we take last week's number, you were off by like 8 cents on the top. And if we go back 2 weeks, I was off by like 26 cents on the bottom. So the consolidation or two levels we've seen over the last 2 weeks kind of hit this week with that sell off on Friday. But we said it here last week. 550 is going to feel like the market's crashing for these day trade Twitter guys. Probably just a reasonable pullback. For me, that we got it in 1 week, a little concerning. Maybe something to look into. But again, expected. We're at 550. Don't cry about it.
yeah, no, for sure. So I got some contracts that woke up to be mindful of, and this is
Love it.
I've been talking about December 500 for a while now, and I was like, it has to have a complement. If it doesn't have a complement, it's kind of just an anomaly. But I mean, it's the highest open interest contract uh, by 6,000. So it's 200,000 205,000 open interest. And then most of the stuff under it's kind of irrelevant at this point. Like 920, 430. That's just garbage. That's not going to do anything. However, um, August and September 520. Those are the ones that woke up. Those are the aggressive pullback buys. Ask side, up 50% in a week, and that's what you want to be mindful of. So I mean, so to me, it implies not a move to 520, but I think at 540, I think that's when they'll close those out. So that's to me what they have in their sights is a pullback under 540, and I don't think it necessarily happens this week, but that's the spot I'm looking at, and then upside. Obviously you're just talking like retraces, but um, that's the flow story that I'm seeing right now.
Interesting. Yeah, I expected pullback. I expect to be a little bit more from here, to be honest. Just like the April move, though, again, how fast it happened. I didn't really expect that. Um,
Yeah,
525 does stand out pretty much everywhere as a floor, so I'm kind of with you. Like if we do pull back, it's going to be a problem there. Um, does it hit? I'm with you more of a 530, maybe 535 guy. Is where I really want to see a higher low form. Um, I personally think earnings are going to be strong enough that it's not going to be in the next 2 weeks. But that's just where I'm at market sentiment wise right now. Friday seemed like overkill. I don't know if you think that too, but Friday seemed like a bit
yeah,
like a
yeah.
bit
I
much.
think very easily could like you revisit the middle of that daily candle, and then we go from there. I think that might be what happens. So even though I am leaning a little bit bearish, it's just kind of like from where to where, like that matters a lot. So
Yes,
I'm gonna
yes.
set my lower number. I'll do that first at 542.62, and I'm going to set my upper number at 555.56.
So I'm a little higher than you on the upside. I got 559.69. Shout out Goose. Just flirting with that 560 number. Probably a wick. Probably a wick. And then 554.87.
Yeah,
It's my 1 hour daily volume profile. If I'm right that Friday was too much, there's not much downside left. Um, I like the 20-day average as a spot to hold. We're buck 50 off there though, so similar bottom this week. Um, yeah, kind of range. Again, I'm looking for the range bound consolidation on this chart. Just the build levels on volume profile. 520, to be honest, pull back and build for a week or two would be perfect from a TA standpoint. But again, like just like last week, I said if that happens, people are going to think the sky is falling.
definitely. And this is where the people who bought Amazon at 200 are just really in
Yeah,
trouble. I think because it
yeah.
might just park down in the 180s for a bit.
No, 100%. I couldn't agree more. Perfect, sir. A little long one here, Day. You ready to get to work?
Yeah, I'll grab a refill on my coffee and we'll get to work.
Perfect. Like and subscribe for more.